Support and resistance levels are one of the most basic yet important theories in technical analysis. The underlying notion is that a technical analyst can recognize specific levels or areas which are expected to force price to reverse, consolidate, or at least give some form of information about the strength of the trend. Historical prices are often deemed one of the most reliable sources of support and resistance, with more notable levels typically coming from significant peaks or troughs in price. Often a level of support or resistance will be respected on a number of occasions, but perhaps not absolutely perfectly. As this collection of peaks or troughs formed over time, so your support or resistance level turns into a zone or area. The France 40 or CAC index is one good example of this market, which has respected both support at 4,500 and resistance at 4,700. Here it is key to note that upon breaking through support, the support then forms resistance, which highlights the fact that both are interchangeable. Other than specific horizontal price points, technical indicators and trend lines can provide dynamic or moving support or resistance levels, which move as the chart progresses. Moving averages are one example which is commonly used amongst traders. A good example of both trendline and moving average support is found within the sterling yen market, which appears to be responding to a trendline dating back to October 2014. However, the bounce higher from this trend line yesterday forced a move through the 100-hour SMA, which has typically provided a reaction as both support and resistance within recent months. Could the fact that we've seen this temporary break through this moving average be indicative of a strong impending move higher given the support from that long-term trend line? The ability to recognize which of the many sources of potential support or resistance indicators will actually force the market to react is something which takes time, and it's important to backtest whether it has worked in the past. What works for one market may not work for another, so that's worth bearing in mind. Now, understanding the role of support and resistance is crucial to being able to recognize where you may want to place your stop losses, which is key to successful trading. Also, by gauging which levels should be of importance, the reaction of price to those levels will tell you a lot about how strong the trend is and what market sentiment is for that market.